Hey guys, Joe Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a trade idea that I've been thinking about. It is to do with WTI, the US benchmark for sweet light crude oil. You can see here I've got it on one-day candlesticks. This is a CFD that sort of moves in line with the front month WTI future, and you can see that after a brief nip above the 200-day moving average, which is there in green on Monday. And a test of the 50-day moving average there in the sort of orangey red on Monday and Tuesday, we've seen a sharp reversal lower. Now, it seems with oil, over the last couple of weeks, it got some minor support from a technical breakout from this long-term downtrend, which we talked about in the video earlier this week. There's also a little bit of chatter about potential OPEC supply cuts, but very much in the last couple of days, global growth fears have retaken over, and there's seemingly more and more momentum towards a deal actually being done with Iran between the US and Western powers and Russia and Iran that would potentially see US sanctions removed and more than 1 million barrels per day in additional Iranian exports returning to global markets. Now, for the longest time, they've been in discussions or not for this deal, and it hasn't worked out. But yeah, looks like it could be a possibility. I think French President Emmanuel Macron was talking about how he thinks a deal could be done in the next couple of days. So getting a bit of a supply shock as well that's been weighing on prices in the last couple of days. And the trade idea that I'm having pretty much is that I think that this move is going to continue. I do think that we're going to test these recent lows from mid-August in the 85 area, and then we're going to test the support in the form of these last October, November highs here. And if an Iran deal is announced in the coming days, or maybe next week or whatever, then I think we could have a very, very swift push lower towards 80 per barrel. Because, guys, it's not just the supply side. It's not just fears about global growth. We're also seeing risk-off moves across asset classes, which also weighs on oil as a risk asset. Let me just show you stocks real quick. It's not fun times for equity invested. Look at this. Stocks are just pretty much since mid-August been selling off hard. We're seeing US yields rising across the board. And this is more of a story to do with the Fed's new hawkish stance. Okay, well, it's not a new hawkish stance, but pretty much markets were underestimating the resolve of the Fed to tighten aggressively and hold interest rates at elevated levels next year. But since mid-August, we've had a very, very strong message from Fed officials. The most important day, of course, was last Friday when Fed Chair Powell spoke at the Jackson Hole event. And the message they've been giving us is pretty much don't bet on interest rate cuts in 2023. We're going to take rates high into restrictive territory, and we're going to leave them there for some time because we need to ensure that inflation is coming back down. And this is a message that markets, US equity markets anyway, haven't enjoyed. And remember, there is a correlation. Obviously, oil is also focused on the supply side and it's more focused on growth as opposed to financial conditions, but there is a correlation and all these things could be happening together. But anyway, guys, hope you enjoyed the video and I'll see you all in the next one.